Yesterday, bearish wave washed our financial markets, including the US stock market. All three benchmark indexes closed with the losses. The fall in the equity market was a delayed response to the Fed's minutes released on Wednesday. The regulator said that it was ready to consider tapering the stimulus program of $120 billion per month. What prospects are ahead of the US stock market? Has it entered a correction phase yet? Let's find out. Yesterday, the S&P 500 shed almost 1%. That is a significant loss. Apart from a response to the Fed's minutes, analysts say there are broader reasons for the market fall. First, the time is ripe for a long-awaited correction. Indeed, traders priced in the benign effect from the economic recovery long ago. Second, market participants fear a widespread of the Delta coronavirus strain. Having regained some of yesterday's losses, the S&P 500 is now trading at near 4,320 points. It's expected to decline to 4,300 on a Monday, though the fall would not be too sharp. Before that, the index could try winning back losses. The US dollar index lost footing yesterday amid a downward correction in the US stock market. The US dollar index dropped to 92.50. It's expected to trade in the corridor of 92 to 93. Looking at the chart, we can assume that the greenback is about to go through a long consolidation at about the current levels. This dynamic is likely to persist until the Fed's policy meeting at the end of the month. Meanwhile, the US dollar is holding the upper hand against its Canadian rival, though it's losing ground against other major currencies. The USD CAD pair is trading at around 1.2530. It's expected to trade in the corridor of 1.2450 to 1.2650. The chart reveals that the loonie is getting back to its fair values as the pressure of high oil prices is fading. The USD CAD pair is likely to climb to 1.2650. On Friday, Bitcoin is gradually gaining footing. It's the beginning of the bearish trend. Traders shifted focus towards the cryptocurrency due to a decline in the US stock market, albeit it's expected to be short-lived. The key stock indexes are trading in the red, so a lot of institutional investors decided to convert their funds into the popular cryptocurrency, despite some risks. The number one digital token is likely to trade in the corridor predicted earlier in our videos, that is from $32,000 to $36,000. These are interim support and resistance which should be broken. To sum up, investors are alarmed by grim economic prospects due to the growing spread of the new coronavirus strain, as Japan introduced an emergency situation in Tokyo ahead of the Summer Olympic Games. Pessimistic market sentiment across American trading floors is cemented by the fact that number of initial unemployment claims rose last week. Hence, we could see a further decline in the US stock market in the nearest days. Time will show.